So we're going to go through a training today about our different real estate tax assistance programs. I'm Graham O'Neill with the Philadelphia Department of Revenue, Director of Taxpayer Assistance and Credit Programs. All right. So the revenue programs that we're going to go over today for real estate taxes. The first one is the homestead exemption. Second is the owner-occupied payment agreement. Third is the senior citizen tax freeze. Sometimes we call that the low-income senior citizen tax freeze or just senior tax freeze. Low-income owner-occupants program, that's LOOP. The active duty tax credit, and the real estate tax installment plan. So what some of the things you should know. Two of our programs this year, these are the big level things, and then we're going to go into each individual one as we go through. But some taxpayers are now going to qualify for a $0 a month owner-occupied payment agreement. Some taxpayers will also automatically qualify to have their current year taxes rolled into their agreements. Taxpayers can also now, that are in the homestead exemption, are going to qualify for about $140 more in savings every year because the homestead exemption was bumped from $30,000 to $40,000. Another big thing to know right now is that the homestead exemption and the low-income senior tax freeze both have an application deadline of September 13th of 2018. So make sure anybody that you're working with gets that application in by September 13th of 2018. And then another big thing is taxpayers can apply for and be enrolled in multiple assistance programs. However, for Homestead and LOOP, two of our biggest programs, you can't have both of those at the same time. So if someone's applying for LOOP and they already have Homestead, they should also make sure you're aware that they're going to be losing that Homestead exemption if they get into LOOP, and vice versa. So all of our assistance programs, when you fill out the application, they're going to need property details on there, and we're going to walk you through right now where you can find that property information in case you don't already know. I'm thinking most of the people in this room probably know all this information, but just bear with me and make sure you point anything out that I miss. So all applications are going to need the OPA number. Sometimes revenue, we still call that the BRT number for those of you who were here before 2013. But OPA number and BRT number are the same exact thing. They're also going to need, obviously, the address and the owner details, meaning their name. You can always find out what the city thinks is the owner's name, or at least the Office of Property Assessment thinks the owner's name and the OPA number through property.phila.gov. And if you look right on here, this is just a screenshot of where you can do that search. One thing that I didn't know for a while I was using this web page is that they actually have a drop-down bar here. So just in case you don't have an address that you want to look up, but you know the owner's name, you can put that owner's name in there, or you can put in the block. Sometimes someone comes in and they're not exactly sure what that block is, what their address is. You can actually pull up the whole 1200 block of East Clementine and just look down on there, and you'll see who all those people are live in that block, and that helps you find the specific property address you're looking for. And also, if for some reason you already have the OPA account number but you don't know the address, you can put that in there as well. So tax balances is one of the things we care about a lot over at the Department of Revenue. One of the things you can link to through the property.phila.gov is how much that property may own in real estate taxes. So if you go here, if you're on property.phila.gov, you've put in an address, you'll see all the information that you're probably familiar with, but then you want to hit this View Tax Balance button. Once you hit that, it's going to pop up a bit of a more of a legacy looking system here, but that's a live look into our real estate tax account system. So anything you see on that real estate tax balance account information page is going to be the actual amount that's owed currently on that property. All right, some information you should know for taxpayers. So where can you find out information about our tax programs? We're going to be sending this all around, so you don't have to memorize this link right now. But if you look up Philadelphia Department of Revenue, hit our Programs tab, go to For Homeowners, it's all right there. And all 8 taxpayer assistance programs that we have are listed right on that page. What if you have a tax relief application and you want to submit it electronically? Right now we don't have it's not like the homestead application where you can put it in, but if you have a paper copy and you want to scan it, you can just email that application right to revenue@phila.gov. For UPA applications, because we want to provide a bit more detail and a bit more responsiveness on these, we have a different email address, which is revenue.payment.agreement@phila.gov. Those of you guys see some of the people nodding your head, you must have been submitting UPA applications through there. But you want to make sure that any application, honestly, if you send it to revenue@phila.gov and it's a homestead application, great. If it's an UPA application, great. We'll get it to the right place as long as you send it to us. But if you can try to, most applications go to revenue@phila.gov. UPA applications go to revenue.payment.agreement@phila.gov. If you have questions just in general about real estate tax bills or payments, you can call 215-686 6442. That's our general real estate tax hotline. You're going to call in, you're going to get connected with someone who's working at the Philadelphia Department of Revenue. They're going to be able to look in TIPS, our system, and answer the questions you have. They'll also be able to mail out an application for any of our programs to a taxpayer should they need that. Questions about Homestead and Loop. We get a lot of these questions, so we have a special phone line for that. It's 215-686-9200. That's our Homestead and Loop hotline. If you call that, you're going to get sent to a special group of specialists that deal just with Homestead and Loop questions. And I know from experience that a lot of you have already called that number and got familiar with how good of a job they do. You can also send any questions you have about taxpayer assistance programs or any kind of revenue question at all to revenue@phila.gov, and within 2 to 3 business days we're going to get back to you with an answer to that question. And then do you have questions about taxes other than real estate, because we do have some other taxes here in Philadelphia other than real estate taxes. You can call 215-686-6600. Who should you contact when a constituent has applied for a program and they haven't heard back from Revenue? Well, that's me. So, don't give this out to everybody, but if you want to, if you're talking to a constituent and they have a question, I'd be happy to answer that as well. But it's graham.o'neill@phila.gov. I can help you look into where that application might be in our system, whether or not we received it. I can give you some details on the application status. For many of our programs that involve income, I can't tell you whether or not that person is approved or denied, because we can't tell someone's income to just anyone who calls up or emails. We would need a special release. But I can tell you if we received an application or if we've made a decision on an application, and that would be a good time to then go talk to the taxpayer and say, okay, we heard you heard back from Revenue, if you wanted to hear the result. So if a constituent is denied for a program and you think they should have been approved, all of our programs have specific appeal rights. So if we make a decision to the Department of Revenue that taxpayer does not agree with, they can go to one of 2 bodies, either the Bureau of Revision of Taxes for homestead decisions or the Tax Review Board for any of our other programs. So let's just say we deny an application. That taxpayer's like, nuh-uh, my income is low enough, I live there. We don't always make the right decision, I'll just say that. I like to think most of the time we do. But every taxpayer has the right to appeal to those authorities. And then they'll have their day in court, so to speak. They'll go down to the TRB or the BRT. They'll sit before a master or, actually the entire panel, and they'll have their case heard. They'll be able to present evidence, and they'll be able to make sure that the city's done everything that we were supposed to do in making those decisions. And then if you have any questions about that process, please just send me an email again. You can also feel free to send me an email if someone is in this process of appealing and you can just see that, hey, Graham, we really think you guys made a mistake here. If it's something like we didn't get a piece of documentation or, it's very clear to you that the process didn't work how it should, send me a quick email. I can go look at that. And if it's something that doesn't need to get all the way to one of the appeal boards, we'll correct it internally, because that honestly saves everybody some time, headache, and money down the road. So let's go over all of the assistance program details. So let's start with the homestead exemption. So we're going to start here because this is our biggest program. We have over about 213,000 people in the city of Philadelphia enrolled in homestead. So we want to make sure that everybody knows the ins and outs of this program pretty well. So who's eligible? Or what is it and who is eligible? So what is it is that the Department of Revenue will reduce the assessed value of the property of homeowners. So meaning we're going to lower the tax bill a little bit for homeowners. And anyone who owns and lives in their property is eligible. So I think that's pretty simple, but just to go over it. So you own it, your name's on the deed. You live in it, meaning you don't have any other residence that you're claiming is your primary residence. Someone who doesn't own the property, maybe they're in a rent-to-own agreement or a tangled title, we do have a special way for them to get into the homestead program. So, general rule is their name needs to be on the deed, but if the person believes they own it, if they have a legal right to claim it as their property, we can help them through the process of getting them into the program as well. And so what are the benefits? Before it was about $420 a year of savings. Now it's going to be about almost $550 or $559 of savings every year for most homeowners. If someone's property isn't valued that high, where we wouldn't tax them more than $559, they're not going to get money back for that, but we'll give them the full exemption. Most people in Philadelphia have the full now going to be $40,000 exemption. And then is there a deadline? Yes, the September 13th of 2018 is our general deadline. However, there is a small caveat. For anybody who newly purchased their home in 2018, we give them until December 1st of every year to apply. That way it gives people who are new homeowners a little bit more time to get their homestead application in. And the reason we set that down is September 13th is because that's what's in the Philadelphia Code, and we have in our regulations that 12/1 of every year for those new homeowners. So how do you apply? Taxpayers are going to need upfront their OPA number, their property address, and their owner details, which most taxpayers are going to carry around in their head, except maybe that OPA number, and there's actually a way to look up the account as well. But the most common way, and the way we encourage everyone to do it, is online through the homestead application. It's right there on Revenue's website. You can find it if you just put in Philadelphia homestead application. It's like it's the first link that pops up. You're going to be able to apply right through here. This is actually a screenshot of what that application looks like. It's pretty simple. As you see, there's about 8 questions that they're going to have to ever fill out. I think it might take people about 5 minutes to get through it. The most common question we get to the homestead hotline is, what's my OPA number? The OPA number is one on property.phila.gov. You can always find it there. You can also, if you hit this account lookup button, it's going to take you right to the OPA's website, property.phila.gov. You'll be able to find that OPA number right there. Just simple things: address, city, owner name 1, owner name 2, and then so on and so forth. Another way to apply is if anybody has difficulty either with this online application, maybe the information that's populating on it is incorrect, or someone just doesn't have access to the internet, they can call 215-686-9200 and apply right over the phone. The person on the other end is going to take that information down, submit an application on their behalf. You can also mail one of the paper applications, which are available on Revenue's website, to P.O. Box 52817. We're going to get that paper application. We're going to scan it. It's going to pop up on one of our eligibility sheets. We're going to run that just like a homestead application that came in online. And also, you can walk into any of Revenue's 3 in-person locations and drop off pick up that paper application, fill it out, and leave it there for us to process it. So the owner-occupied payment agreement. So what is it and who's eligible? So the owner-occupied payment agreement is a payment agreement for owner-occupants. So that's the same rules as homestead. They have to own the home and live in it. And it's a special payment agreement that we have that there's no down payment. We're going to base the minimum monthly payment off of their income and their household size. And anyone who has past due taxes is eligible. So homeowners, and the biggest benefit of it, quite honestly, is that it prevents the Department of Revenue or the City of Philadelphia from filing a foreclosure action as long as they stay current on those taxes. So we really like it, one, because it protects people's homes, but also because it brings revenue in that we weren't getting beforehand. So it's one of the things we talked about in the beginning, but some owners can pay their current year taxes as well as their prior year taxes with UPA. So we're going to get into that in a second, some of the details. So the way that we determine the monthly payment amounts, this is all on our website as well, is we put taxpayers into one of these 5 tiers based off their income. So we do it based on monthly income and household size. So income ranges all the way from, let's just say for a 2-person household, the average household size in Philadelphia, you can have an income of up to $4,081 a month and still qualify for an owner-occupied payment agreement. It's a pretty high income level. I will say that most of the people in UPA fall into either our Tier 4 or now our new Tier 5 program, about 85%, which is a significantly lower income level. The maximum there is $1,749 for that 2-person household. And then this year, with some of the legislative changes that have taken place, there's some new benefits for people in these lower 2 tiers. I know a lot of you were here for our UPA training a few months ago, so you probably know all about this already. But for those of you who weren't, or just might a refresher, anybody who is in this new Tier 5, which is about 15% of AMI, they're going to automatically be eligible for a $0 minimum monthly payment agreement. So they can pay as much as they want every month, but their minimum payment due is $0 a month. And this is a way for us just to protect our most vulnerable homeowners. These are people that, they may not have any money to give us. We just want to be able to keep them in their home as long as possible. One thing to note, though, is that with all of these, the money that's owed on the property is not forgiven. It's added to the tax balance, and it will build up. But for some people that are don't have a whole lot of income, that might just be what they need to be able to stay in their home and maintain what's going on just for a little bit longer.
Interest on that? Interest?
Interest. So interest and penalties will keep accruing. However, one of the other benefits of UPA is that based off your income tier, and for Tiers 4 and Tier 5, we forgive some portion of your interest and penalties. So for tiers 4 and tier 5, it's 100% of your interest and 100% of your penalties. So say I owe $2,000 and I get into an UPA payment agreement, and $1,000 of that is in interest and penalties. As long as I make, I don't know, 10, it won't be this, but 10 payments of $100, we're going to forgive the $1,000 of interest and penalties once it's forgiven. So interest and penalties will keep accruing, but one of the standard baked-in parts of all UPA payment agreements is some level of interest and penalty forgiveness, and it's graduated as the income levels go up. Does that answer your question?
Yes.
Great. So part of that $0 minimum monthly payment agreement is if you are what we consider to be a person who's more vulnerable to the effects of foreclosure, that would be someone who is 65 years or older, someone who's a widower or widower of someone who was 65 years or older and is 55 at the time, someone who's permanently disabled, or someone whose income and expenses net out to less than $25 a month. You can be in this tier 4, so you can have that slightly higher income level, and we're still going to qualify you for that $0 a month payment agreement. So UPA, how do you apply? We have a lovely new redesigned UPA application. It's one of the things we're really proud of at Revenue right now. Is our UPA application before was a little older school, we'll call it that. Now we tried to revamp the whole application to make it a lot easier for people to walk through. We broke down the sections into different sections and then matched each section with what documents you're going to need and put those instructions right in there. And this is one of the things too, is that we like how this looks, but we always want feedback on where we can make it look a little bit better. And for those people in the room who are applying people and helping people apply for UPA, you guys are our best source of information about where people are struggling to fill out the application. So that's another thing you can email graham.o'neill@phila.gov about. You're going to want to fill out this application. It's on Revenue's website. You're going to email it again to revenue.payment.agreement@phila.gov. You can also call 215-686-6442, have an application sent out to the taxpayer, or you can mail it to P.O. Box 53250 at Philadelphia, PA 19101. Most of you should just email it to revenue.payment.agreement@phila.gov. It's a better way of keeping track of it. That way you know for a fact that Revenue got that application. You can also have a taxpayer go into any of our offices and do the UPA application right there on the spot. So we kind of went over some of this. Is there anything new? So some of these things are in mid-April, we sent out notices to some taxpayers that their current taxes, that means people whose 2018 taxes that were already, people who had an UPA agreement, so let's say they had it for 2014, 2015, 2016. We sent out everyone who was in one of those lower income tiers notices that we're going to be putting their current year taxes, that's any money they still owed, whether that be from 2018, 2017, we're going to put that into their agreement, because that's part of what those legislative changes allow us to do. Before, we used to have people every year they'd be coming in looking to have these years added. We had to go through a complicated process involving our legal department, a bunch of different stuff. Everything was simplified with these legislative changes, so now we can take any of that remaining balance and just put it into the agreement as the years go on. In July, some taxpayers will receive a notification that their taxes that were in installment agreements can be rolled into their UPA agreement. So one of our other programs that we're going to talk about was the installment program. That program was for senior citizens or low-income taxpayers that wanted to take that current year balance and break it up into 12 monthly installments. Some of the people we found were in both of our UPA agreements and in our installment agreements, but they hadn't paid off all of the installment agreement. So now we're going to give them the option of either putting all that money right into their UPA or continuing to stay enrolled in the installment agreement. And the choice people have there is, do I want to have the 2018 taxes put into the UPA agreement and potentially make that, or definitely make that agreement longer? Or do I have the ability to pay my current year taxes while I'm paying off my UPA agreement in separate chunks? We just want to make it as easy as possible for taxpayers to pay us in the way that it works for them. By the end of the summer, some taxpayers will receive a notification that their UPA payments will go to current year taxes first before prior periods. That's one of the other changes. So one of the great programs that the state of Pennsylvania offers is called the Property Tax and Rent Rebate. That program says that if you're under a certain income limit, you can get a rebate on the taxes that you paid from the year before. The issue with some of our UPA participants is they may have been non-compliant in the past, but they got into UPA, they're paying off their bills, they're doing everything they can, but just because of the way that the language in the law was written, we had to take any money that we got and put it on previous year taxes automatically. So they would go to the PA Department of Revenue, they would say, I want to apply for this, I'm paying my property taxes, because to them they are. They're paying their taxes just like anybody else. They go and they fill out the application. PA Department of Revenue looks to see did they pay last year's taxes. They haven't, because they were paying 2015's taxes. So now for people that are demonstrably eligible is what the language says for property tax and rent rebate, we're going to put a special flag on their account. And now every dollar that comes in from that payment agreement is going to go to their current year taxes first, so that when they apply their, for the property tax and rent rebate, there's going to be money there for them to get rebated. And that notice is just telling people, hey, this is going to happen. Make sure you apply for the property tax and rent rebate in future years. And then we'll soon ask taxpayers who request an UFA if they would like to speak to a housing counselor. One of the other big parts of the legislation was that every taxpayer who wants it, and now the Department of Revenue has to affirmatively ask for it. We have to sit there and we have to put down on the application, would you like access to a housing counseling session? We're going to be putting that information down as soon as we iron out the details of sharing it with the housing counseling agencies here in town. But we're going to take that information, anybody who says yes, we're going to send the housing counseling agencies that list of names, and they're going to be able to reach out to those taxpayers and set up a free housing counseling session. So we're really excited about that. It's going to help taxpayers understand what's going on a little bit better, because sometimes people come into the Department of Revenue and they have a lot of questions about, what should I do here? What should I do this? What should I do with that? And the people that work in our offices are really good at answering tax-related questions specifically, but there's a lot of times people need advice, and need advice that the Department of Revenue can't give them. So we're really excited to be able to be working with the Department of Housing and Community Development to facilitate them getting these free housing counseling sessions. And then you can also check out our YouTube channel for a video training on the UPA changes. So I did a training just like this one in this room, where I went into a heck of a lot more detail about UPA, and you can watch that video and we'll go through it. I think I was even wearing a pink shirt. So low-income senior citizen real estate tax freeze. What is it and who's eligible? So what is it is that anyone who's eligible for this program, we're going to freeze the amount of money that they owe the Philadelphia for their taxes every year. That amount of money can go down. So say I'm a 65-year-old, I qualify for the program. This year my tax bill is $1,000. As long as I'm enrolled in the program, I won't pay more than $1,000. But if the city determines through a property assessment that I owe $900, I will pay that. If they say that I owe $1,500, I'll still pay $1,000. So homeowners must be eligible seniors, which means they have to be 65 years of age or older, or a person who lives in the same household with a spouse who is age 65 years or older, or a person who's 50 years or older and who is a widow or widower of someone who reached the age of 65 before passing away. So that one gets complicated. It's hard for me to say it every time, so that's why I have to keep looking back. And then this is the other big part. They have to meet certain income limits. So those income limits are set by the state. Then they are $23,500 or less for a single person, or if a married couple is applying, it's $31,500 to qualify for the program. So what are the benefits? We went over those, but the amount of property taxes paid each year will not increase, even if the property assessment or our tax rate changes. And the tax liability will decrease due to a lower assessment or a tax rate decrease. I think that was a much better way of saying that. And is there a deadline? Yes, September 13th of 2018. This is the last date for low-income seniors to freeze their tax bills, for the 2019 real estate bill, which are based on the 2019 assessments go out. That's the same deadline for homestead, remember, but also keep in mind that December 1st deadline for new homeowners does not apply to senior tax free. So there's only one deadline. It's set hard and fast, September 13th of 2018. So how do you apply? This is our 2018 application for senior tax freeze. Taxpayers are going to need the details of their property. That's OPA number right up here. They're going to need their property address, their owner name, their social security number. Just answer some quick questions on whether or not it's their primary residence. If anybody checks, no, this is not my primary residence, it's their right to keep submitting that application, but I would advise them if it's not your primary residence, we're going to have to deny you because it's only for your primary residence. They're also going to put in their filing status, whether that be single or married, their birth date, and if they have a spouse that they're applying with, their social security number and that spouse date of birth. One thing to bring up here too is that if they're married and their spouse is living, they have to apply with their spouse. It's not an option. And if the qualifying spouse is deceased, they're going to want to put in that person's date of death in there as well. Then we ask you some other quick questions about, do you claim anywhere else as your primary residence, some co-op questions. We put these in here because anybody who gets into the senior tax freeze, we're going to give them homestead every year as well. So we just take that list of people that are in senior tax freeze, we take a list of people that are in homestead, we find out who has senior tax freeze, doesn't have homestead, we give those people homestead as well because you've already demonstrated to us that you own and occupy the home, making you eligible for homestead. We also do the same thing with UPA every year. So that's another thing that we do. And also down here, they're going to put in some of their income details. I won't go into it because we'll be here forever talking about the details, but all of the different, whether or not you pay gross, whether or not you pay, what to report is all written down right here. So you can email these applications to revenue@phila.gov. You can call 215-686-6442 to request that an application be sent out to a property. And then you can also mail them into P.O. Box 53190 at the Department of Revenue as well. You can also, as with all of our programs, submit one in person at any one of our 3 locations throughout the city. So then there's a long-time owner-occupants program. So LOOP, what is it? I'm sure a lot of you guys know what LOOP is, but we're going to go over some of the details here. It's a real estate tax abatement for homeowners who have had their property taxes triple. That's go up 3 times, or had their property tax assessment go up by 3 times from one year to the next. So for this year, that'll be 2018 to 2019. If their property tax assessment tripled between 2018 and 2019, that makes the property eligible for LOOP. They also then must meet some other requirements. Those are having lived in the home for 10 years. So for this year, if someone's property taxes tripled between 2018 and 2019, they must have been living in the home since July 1st of 2008 to meet the second qualification for LOOP. Then the third qualification for LOOP, if they meet those first 2, is be under the income limits. We're going to go into those in detail. So the first big question, the thing that can help you work out with a taxpayer whether or not they might be eligible for LOOP is right there on property.phila.gov again. So you go to property.phila.gov, you search the property for the property, then you can look up the property's evaluation. So on that website we were looking at before, there's going to be a table breakdown. You're going to want to look for 2018 and 2019, and you're going to want to see, did this number here, so in this case it's $53,900, has it tripled in 2019? So for $230,000, that has tripled. But if this number is not 3 times lower than the 2019 value, it doesn't matter any of the other details about the application, we cannot approve that application. So that's a pretty big, important distinction and something that can help you navigate whether or not another program might be more beneficial, like Homestead. So what are the benefits? Taxpayers are protected from assessment increases as long as they remain eligible. So what will happen is, let's use that example. Let's say their 2018 valuation was $50,000 and now their 2019 evaluation is $3 million. Let's just say it's that. We're going to cap their assessment at $150,000, so 3 times the previous year's assessment. And we won't charge them any more taxes above what they would have to pay for $150,000. Does that make sense? And then, if their assessment for some reason goes down, we will let that valuation go down, but they won't pay any more than 3 times the value. So another important distinction, we talked about it before, is that taxpayers can enroll in LOOP, cannot enroll, I almost messed that up for the camera, they cannot enroll both in LOOP and Homestead at the same time. A lot of people, they're going to have a choice to make, and you can help them calculate whether or not Homestead or LOOP is going to save them more money. There's costs and benefits for being in one or the other. Homestead is a constant program. LOOP is also a constant program, but there's going to be times for people that are right around 300% increases that they're going to save more money in Homestead. Whether or not it'll be up to either housing counselors or your offices to decide with them, what's the best option for them. Another big distinction is that while they can say, if they already have Homestead, they can tell us, hey, I don't want that Homestead anymore because I'm applying for LOOP. If for some reason they are in LOOP and they want to apply for Homestead, they can't get back into LOOP. That's an irrevocable decision. That's, again, baked into the law. There's not any real wiggle room on that. So if someone is applying and you're talking to them and they already have LOOP and they came in, because we get this a lot, they say, okay, Homestead is going to save me more money every year. Yes, it will, but also remember that if if they get out of loop, we can't put them back in if that valuation keeps rising in future years. So how do you apply? It's a paper-based application. You're going to want to mail those applications to P.O. Box 53250 at the Department of Revenue. And now some of the new things that we're doing this year with, well, not new, but one of the things that we're doing next week actually is we're going to be mailing the around 2,000 taxpayers that have property evaluations that tripled in the city of Philadelphia. So one of the things that's in the law as well and that we do at the Department of Revenue is every year we look at this year we look at the 2018 and the 2019 assessment changes. We find everybody who has a property that tripled in value. We take out some of the more obvious things that are like hotels, big things that people obviously aren't living in, and we send them out a proactive mailing that says you may be eligible. We're also going to be putting up a Google form where we're going to give access just to constituent elected officials' office, so when you're helping people, you can actually see that list that we mailed out to, and it's going to be broken down by council district, and we're going to give the list to everyone because it's all open data. You could, if you had the time, you could go through and look up all 2,000 yourself, but to make it easier for everybody, we're just going to put it in there. So if you have any questions, if you're looking at the property.phila.gov and you're not quite sure, did this triple in value, we're going to be putting out that list of the people that we sent these letters to. You can also know, if someone comes into one of your offices, you'll see if they're one of your constituents, you'll be able to give them a little bit better informed conversation about why they got that letter. And then that mailing that we send out does have an application already included in it. They can just fill it out and send it back in. So those should be about the only 2,000 people in the city of Philadelphia that are potentially eligible for LOOP. Things aren't foolproof. If you think you see someone that didn't get that letter, or for whatever reason you think they need to apply, please submit an application. But that should be the biggest universe of people that are eligible. And another thing to remember about that letter is that we're sending it out based off just that assessment. We can't know if someone's an owner-occupant on a property. We know if they have homestead or something like that, but that's not something, someone has to come and tell us basically they're an owner-occupant. It's not something we know before we send out those letters. So our next program is the active duty tax credit. This coming soon should be down. This is actually the new website for it. The credit excuses Reserve and National Guard military service members from paying the city portion of their real estate taxes every year. So we call it the active duty tax credit because it's for, one of the caveats to get into it is that they can't be in the Reserve or National Guard. They don't qualify if they're just going to Fort Indian Town Gap for their training every 2 weeks every year. It qualifies if they get called to active duty, which is a form that they'll get. It's a DD. I was going to try to be impressive and remember which one it was, but it's the DD 241, I believe, is their activation orders. So they need to be activated outside of the state of Pennsylvania. So that's for someone who may get called to go to Puerto Rico for the to assist with the hurricane relief efforts there, or someone who gets called to duty in Afghanistan or Iraq or anywhere else. It's for those. So what we'll do is for every day that they're deployed outside of the city of Philadelphia, we'll either forgive or refund them the city portion of the taxes that they paid. So what are the benefits? The taxpayers will not pay taxes on their property for any days that they were on active duty. Something to remember too is that city portion, I believe, is it 60%? 45%, I can never get that right. The city portion of the tax is about 45% of the total tax bill. The rest of it goes to the school district, and we're not allowed by law to forgive that portion. That has to go to the school district. So this benefit will forgive about 45% of the real estate taxes. It's still a significant chunk of money, especially if someone's deployed for 9 months, 14-month deployment. It can be a good chunk of money that'll kind of, help make that service a little easier for them and their families to bear. Is there a deadline? There is a deadline. It's March 31st of every year. One of the things we have is we have the ability to waive that deadline. And because of the nature of this program, because of the people that are applying for it, if someone comes to us and says, hey, I've been deployed, I wasn't here in March 31st of 2018, we can actually go back 3 years and they can apply for up to 3 years previously, and we'll refund them that money and we'll waive that deadline. That's something that if you're going to submit an application that's not for the most previous year, just send me a quick email about it. Say, hey, we think there's someone that's likely eligible for this. That'll help me kind of shepherd it through our process. There's not going to be, because of the universe of eligible people, there's not going to be a ton of people that are qualifying for this every year, so this is one we can spend a little bit more time trying to help this application through the system. So how do you apply? It's another one of our paper-based applications. You see it, it'll actually, see, I should have waited to ask you because it says right here, the 45%. It'll walk you through how to do the calculation for them so they know exactly how much money that they're asking for back. You want to email a completed application to revenue@phila.gov. Again, you can call our 686-6442, request an application. We'll mail it right out to the taxpayer. Or you can submit it to PO Box 53190, and then we'll get that paper application and process it. So the last one we're going to talk about today is the real estate tax installment plan. We talked about this a little bit at the beginning. This is a program that will break up their current year real estate taxes into monthly installments. And everybody who qualifies for this is anyone in the city who's had his income below 50% of AMI. For those of you that are really UPA buffs, that's the tier 2 of UPA. You can look on there. There's actually also an income tier on the website as well. And if you're a senior citizen, no matter what your income, you qualify for the installment program. So if you're age 65 or older, you can have any amount of income you want. We'll still break up your taxes into 12 monthly installments. And the benefits just can pay their current year real estate taxes in monthly installments throughout the year without any interest or penalties accruing. So taxpayers in financial hardship UPAs, that's anybody in tier 5 we were talking about earlier, or anybody who's in tier 4 that's 65 or older or permanently disabled, will not need to apply for an installment plan anymore where they used to have to, because we're going to be taking that money that they owe for the current year and putting it into their UPA if they choose. They can still apply if they want to, but they just now have this kind of baked in option in their UPA agreement that's going to take care of that current monthly, that current year payment agreement balance. So is there a deadline? Yes, there is a deadline, March 31st of 2019. So that's the deadline to have your current year taxes put into an installment agreement. You can still submit an application, on April 1st if you want to, but we're going to treat that application as if you're applying for the next year's installment agreements. And that's only because that's March 31st of 2019 is when all the bills are due. So if someone has not gotten to the program by then, they're going to need to apply for an UPA because that agreement is delinquent, or that balance is delinquent. So you'll need the property address, the owner information, and the household income information, all the stuff you've had to fill out for all the other applications. And if you're a senior, they don't need to put any details about household income. They just need to send us proof of age. So just a copy of their ID with their birth date on it. And then you can email it, again, revenue@phila.gov, email that application. You can mail it to PO Box 53190, or you can call 215-686-6442, and we're going to send out an application right to that person's address. And so last but not least, these are all of our different social media channels. We hope everybody here, both their offices and you personally, are following us on YouTube and on Facebook. We're going to put videos like this up. Also, we have tons of videos on all of our different business taxes, all the really complicated stuff Revenue does. We've been doing a really great job this year of putting out videos that make it a little bit easier to explain. We also have videos now for a lot of our programs in multiple languages. I know we have homestead information in Russian, French, Spanish. Okay. So, but we're working every day to add new material, and we love to hear suggestions on what you think would be good material for Philadelphians to know, and in what languages as well. And if you have any more questions, again, graham.o'neill@phila.gov. My cards are right over there. And now for everybody's favorite part, questions. No, okay, good. I thought there was no questions for a second.
5. So if it's a 0 payment monthly, and I understand they can make payments if they like, but let's say they truly can't. How is their interest and penalty then forgiven? Just because they're enrolled?
So when the agreement is so when the balance is paid off is when it'll be forgiven.
So what if that's in the case of selling the property then?
So when they sell the property,
only the principal would be taken, not the interest and penalty?
To be honest with you, the law doesn't spell that out, but so we're going to treat it like any other property sale where all the money is due will either transfer to the new owner or be taken care of at settlement based upon an agreement between the two parties involved in the sale. So all that money is still owed. Again, this is about protecting the current homeowner from losing their home and facing homelessness. Yeah. Donna.
Like we're at an event, because I take a lot of the homestead applications and things the senior freezes application to event. If I get a group of them, I can just scan them over to you. Like if they wanted to fill them out there, am I able to take them and just scan a group of them to you at a time?
Sure. So the question was, if you're at an outreach event, you've filled out a lot of paper applications for homestead, for any of our programs, let's just say, you can email them right to revenue@phila.gov, all as one big batch. They don't have to come in under separate email subject lines. If you're particularly concerned there's a big batch or you want to make sure it gets tracked, feel free to copy me on that email and just make sure that I know that they're coming.
Okay.
But again, you don't need to copy me, revenue@phila.gov. We actually have this cool new system where we're going to send you out a ticket with a confirmation number saying, hey, we got your request. You're going to be able to track it.
You had mentioned that you guys flag some accounts for people who have the property tax rebate.
Yep.
How do you identify that based on their ages? I mean, how do you?
Yeah, so, perfect question. So we have the question was, how do we flag in our system when someone is potentially eligible for the property tax and rent rebate? We do it in a number of different ways. So one, we know based off the application, we get a general sense from their income and their age whether or not they would be eligible for the property tax and rent rebate. We also did something pretty cool where we worked with the Pennsylvania Department of Revenue, who are the people that we send all that tax account information to so they can check it. So we just said, hey, can you send us back eligibility information for the last few years? So many people that are applying for REPA aren't going to have applied for property tax and rent rebate, but we're going to be able to put a flag on any account we have that got a property tax and rent rebate, so we know again that they are potentially eligible. One more, but then I gotta let.
Okay, you know how you go on to PhiladelphiaProperties.gov and it lists that people had homestead. Is it possible to list if they had loop? Because some people I call, like they thought they had homestead, and then I call and they say, oh, we put them on loop because it was a better program for them. And I was like, is it to make that visible on?
So the question is, if on property.phila.gov we can list if someone's eligible in loop.
Or if they have.
Or if they have loop.
If they have loop.
Okay, so the answer there is, the short answer is no, we can't. Because disclosing whether or not someone is owner-occupant is not income-based. Anything that's income-based, there's some pretty strict federal law around tax information that we can't disclose that. I will say that you will be able to see on there if there's any kind of abated value on the property. So it's not going to tell you specifically whether or not someone's in loop, but it's a good indicator that there's something else going on, because for most of the abatements in the city, you can't also then have homestead as well, and that's like 10-year tax abatements, things like that. You had a question.
Yeah.
And what's your name, sir?
Chris.
Chris? Nice to meet you.
Nice to meet you. You're a senior and you're eligible for freezing your taxes.
Mm-hmm.
And in your mind, he or she is thinking, I'm going to live out my days, and when I pass away or when property sold, the city will get their real estate tax. Is that part of the motive here? And if so, I want to have another question.
So I can't, the question is that when someone's applying for senior tax freeze or they're in senior tax freeze, maybe you can rephrase the question because I'm not sure what.
If I understood right, they don't have to pay taxes if they're eligible. I mean, that's income.
Okay, so let's stop there. So the first part of the question is, people in senior tax freeze, do they have to pay taxes? Yes, they do have to pay taxes. We're just freezing the amount of money. So we're not going to increase the amount of money we charge them. They're still going to be eligible. They're still going to be on, they're going to have to pay whatever amount of money we're freezing it at. So use the example again, my taxes rate, I'm a senior. My taxes right now are $1,000 a year.
Yeah.
I get into senior tax freeze. My taxes are always going to be $1,000 a year or lower.
Okay, and I apologize.
That's okay.
You had some kind of policy, they were under a certain amount of money, I think it's like $21,000, they would not have to pay until it'll accumulate and grow interest, but eventually when the house is sold, by their death, they move on.
Okay.
The city gets compensated. Did I understand that right?
So I think what you might be referring to is the people that are in our owner-occupied payment agreements. So that's people who owe back taxes. If they are at certain income levels, if they're at 15% of AMI or lower, no matter what else is going on with them, we're going to say that they have a $0 a month minimum payment. If they are at 30% of AMI or lower, which is about $1,400 a month, and they're 65 or permanently disabled, we're also going to say that their minimum monthly payment is $0 a month. What happens to that balance is it will keep accumulating. I can't speak to the motive of why the legislation was written that way. That was written by City Council. One of the benefits that I can say that I know it does is it keeps that person in the home. It protects them from sheriff's sale. I don't know what will happen between what happened to that tax balance when they decide to sell it, or their heirs decide to sell it, is going to be between them and the person they're selling the property to. We don't provide any advice on whether or not there's the long-term ramifications of the payment agreement.
Just clarify, they could hypothetically not pay taxes throughout that period of time.
Hypothetically, they would be in a $0 a month minimum payment agreement.
Okay,
And that's all part of the legislation.
thank you.
Sure, no problem. Any other questions? Eric?
I know this from the slide before I understand. Income limits for tier 4 and 5, what are they?
The income limit for UPAs, let's go back. All right, so this is kind of hard to see, but the income limits for tier 4 and 5. Tier 4 income limits are 30% of AMI, so one that's like a good touchstone for you to go back on if you ever forget or don't remember what they are yearly. But right now, let's say for a one-person household, income limits for tier 4 is $1,530 a month, or for tier 5, $767 a month. A good rubric for if you have someone in front of you, whether or not they'd be eligible for tier 5, if they're getting SSI, it's about $780 right now, $750 depending on your level of state payment that you get. And we purposely, when we were asked to write some income limits for these programs, we tried to get it as close to SSI as possible. So that's a good way of knowing, at least for that one-person household. And then they move forward by 8%, which I just learned today. They move forward by 8% for every household size that goes up. So if you get down to a 9-person household, the income limit is going to be 8% more for a 9-person household, and so on and so forth. And the question was, I don't know if I repeated it for the video, was what the tier 4 and tier 5 income limits were for the owner-occupied payment agreement.
What constitutes house size?
It's a good question. So it varies from program to program, but in general, the household size is anyone who's living.
Have to be family?
There's a definition we can put. I'll put in the information that we send out to you. We asked our technical staff to come up with like a very specific definition, but what it boils down to is anyone who claims that as their primary residency. And a good rubric for that is, are they putting that down on their taxes as their primary residency? But so anyone who's living in the home.
On the application, I wasn't looking, but
That's
is there
okay.
a spot for household size
Yes.
on there?
So for UPA, it is how many people live in your household right there.
Okay, and then what's the verification of that?
The verification
If
of,
we fill out a form, they say, I'm a 9-person household. How do you verify that, or how do we verify that?
so what we mostly care about is the income contributing members of the household. So we're going to ask for verification on their income. Right now, we're not currently asking taxpayers to provide verification information for every single person.
Okay.
Because most of the time, it's children. And we don't want to be asking taxpayers for a whole lot of information to verify, like, if their children are living there. But it's a good question. It's something we do think about. Any other questions? You guys are letting me off easy.
So you're on a payment plan, and you don't pay anything on the payment plan until the end of the year. Is that held against you, or is the motive to pay it in full by the end of the year? So you're on installments.
You're on an
You
installment.
haven't made any installments at all during the course of the year until almost closer to the payoff time at the end of the year.
So we're for the camera, for the video, we're talking about the installment payment agreements
Right.
now, not UPA.
Right. the
Okay.
installment payment.
So for that program, the person is supposed to be making 12 monthly payments. If for some reason they don't, but then at the end of the year they pay the whole tax balance, I mean, they're going to get the benefit of the installment agreement, which is the interest and penalties will be waived. But we encourage them to please make those payments in 12 monthly installments, because the purpose of the program is to provide an easier way for someone to budget out those payments. So if they have that money at the end of the year, maybe that'd be a good thing for them to talk to a housing counselor about, how can they get that money in the beginning, so.
And if you're successful with the installment plan during the course of the year, are you automatically re-enrolled?
You are, that's a great question. So that's the installment, the real estate tax installment program. Once you get into it, as long as there's no deed change on the property, we're going to keep that person in the installment payment agreement. They don't need to reapply. So just please, if they come in and they're already getting those coupons, we don't need another application from them. We're going to keep sending them out those coupons as well. And for all of our programs, generally we encourage people to let us know if they move out of the property. Well, it's a requirement that they let us know if they move out of the property. Therefore, we're no longer being eligible for one of these programs. But if we see a deed change, if a deed change comes through that changes the ownership, we take away enrollment in that program. And so for most of the time that happens because of the volume for homestead. Someone sells the property. Part of our process internally is to go through when we see a deed change and remove that homestead for the next year. That's why, so that can get kind of tricky when someone is just adding someone to their deed or taking away someone from their deed. Everybody has sent out a notice from the Department of Records that says, in there, that says, hey, you're going to have homestead removed, because we can't, what we do is we take a look at those records as they go through, and we try to do our best at making sure that people that are just adding a name or taking off a name, as long as there's one owner-occupant on there, we try to keep that homestead on there, but it's not foolproof because it's a manual process, and because the deeds don't have any real information about owner-occupancy, we encourage anyone who is changing their deed in any way to submit another homestead application, just to make sure that we don't miss anybody.
Now, I know this question has nothing to do with,
That's okay.
because we're talking about programming.
Mm-hmm.
But you get into tax trouble, and at the end of the, you get into tax trouble, and your house is getting ready to be taken from you because of taxes. What should that person do? Should they try to talk to revenue first? Do they contact us? I mean, what's one of the best ways to avoid going through the court system, having to go to 296, fill out all the paperwork and all that good stuff?
So the best thing to do is to come into the Department of Revenue and talk over what the situation is, because they may not be a owner-occupant. The question was, what's the best thing to do once your home is starting the process towards sheriff sale?
Correct.
Best thing to do is to come into the Department of Revenue and talk through what's going on. Our staff is trained to offer people, owner-occupants, an UPA. If they're not a owner-occupant, a standard payment agreement. If they don't feel comfortable going into the Department of Revenue for whatever reason, I would say the next best bet is to go to a housing counseling agency. There's about 20 across the city. I could be getting that. I'm definitely getting that number wrong. But there's about 20 of them across the city. They're in most neighborhoods in Philadelphia has a housing counseling agency. They're run through the Department of Housing and Community Development, which is now part of the Office of Planning here. Those housing counselors also have access and a lot of expertise. In fact, most of the things I know about any of these programs were taught to me by housing counselors. So they can go in there and talk through what their options are as well. But again, come into the Department of Revenue and talk to one of our staff members down in the concourse or up in the Northeast at our Northeast office, or at 22nd and Lehigh at our North Philadelphia office. Go ahead.
Regarding the owner-occupied payment agreement, say the liens on the property are owned by a third party. Does that agreement change between the city and
So do you mean
third-party lien holders? Say it's Linebarger or GRB, and
That's
they get a fee for holding the liens on the property. But if they're not pursuing collection at that point, what happens to those liens?
So the
They
question
get
is,
back
if you go on the City of Philadelphia's real estate tax lookup and you see GRB or Linebarger listed in the status code, that's the practical way, I guess, of explaining that. They can go into GRB and Linebarger, and they have every right to an owner-occupied payment agreement as anyone else in the City of Philadelphia. So there's no difference from the taxpayer's perspective. They go into Linebarger or GRB, and they apply for an UPA. If for some reason that doesn't get offered to them and they're a homeowner, reach out to me directly, and we'll make sure that they are taken care of and given the opportunity to apply for an owner-occupied payment agreement. But I will say, GRB and Linebarger do a very good job of processing those UPA applications. So, does that answer your question?
Yep.
All right. Any non-UPA questions? All right. Cool. Well, we're all good to go. Thank you all for coming, everyone. Please take one of my cards.